Hi, it's Downtown Josh Brown. I'm here with Michael Batnick.
Hey, guys.
We're about to play our favorite game. What are your thoughts? Michael doesn't know what I'm going to ask him about, and I don't know what he's going to ask me about. Stick around. Let's see what's happening. All right.
Nope.
I have the first.
Nope.
You're going first?
I'm starting.
Oh, all right, go.
All right. Did you see this post from JP Morgan, the Armageddonists?
No. Oh, yes. I saw a chart from it.
Okay, so here's the lead. While recessions and bear markets are a fact of life, something peculiar happened after the global financial crisis. The rise of the Armageddonists, which refers to the market watchers, forecasters, and money managers whose apocalyptic comments spread like wildfire in print and online financial news.
This is the gulliest thing
I've
ever seen.
You don't really see this from places like JP Morgan, and we're at all-time highs. It's like 17 years into this bull market.
This looks like a blog post that Barry Ritholtz would have done.
Is this a little toppy or what?
Duncan, you're gonna pop that chart up, right?
This might not age well.
Well, yeah, and they went after like some really big gun locks in there.
They name names. But do you think that the people on this list are sort of like the people that got stuck in the forest and didn't know that World War II ended like 30 years ago?
No, I think it's a great illustration of the recency bias and how everyone, no matter how skilled or smart or experienced they are, at some point falls prey to it. Like,
why recency?
Because we had not even come out of the crisis and people were already calling for the next one. And I totally understand that. I was in 2011, I was super bearish.
In 2010, I was buying FAZ. Remember that?
What, triple short?
Bears. Banks.
Banks?
Yeah.
Yeah.
Right at the bottom.
So I try not to make fun of people because I'm sure I do the same thing all the time. I'm super bullish right now. Why wouldn't I be? 14.5% annual returns for 10 years.
We're on camera.
I'm just saying, I think I'm just surprised JP Morgan asset management.
It was aggressive. All right, what do you got?
It was super aggressive. I got an interesting question from a prospective client of one of our advisors, I think 2 days ago, over the phone. And I thought I gave a good answer, but I wanted to hear how you would have answered this. So he said, I completely understand that the market and the economy are not the same thing. I also understand that overall levels of debt grow with the economy, commensurate. But the national debt as of the end of 2018 is $22 trillion. That's
a big number.
It's 106% of the U.S. economy, and it's the biggest of all time. And he's like, so in the short term, I understand markets are going to do whatever they want, but what about as a long-term risk that somehow blows up?
Yeah.
So here's what I said. I made 2 points. The first point I made...
Wait, so you want to hear what I said, or you want me to agree with what you said?
Well, I want to hear if you would have answered this differently.
Go ahead.
So the first point I made was that most of that debt we owe to ourselves. And actually, China's been a net seller of U.S. Treasuries for 6 years now. And owing money to yourself is not as scary as owing money to creditors. But then the other thing, and I didn't have the data, but I had a rough idea.
What are you peeking at?
I'm peeking at something that I think is important. From 1940 to 2018, government debt to GDP in the United States averaged 62%. So he kind of has a point.
What's it today?
I just told you 106%. Okay. The all-time high, though, was 118% in 1946.
Looks cheap.
And the record low was 31% in 1981. So my point was that forward stock returns aren't predicated on all-time record highs and lows of total indebtedness because we've seen good outcomes and bad outcomes on different debt levels. I don't know what would you have said?
Disclaimer: I'm not a financial advisor, so this might not be a good answer.
Okay, fair enough.
Come on.
No, what would you have said?
No, that would be my answer.
What I said?
No, come on.
You would have said, "Come on, just shut up, bye."
I mean, listen, there are always things to be worried about.
You agree though that that's a legit long-term concern for everyone, not just investors.
Yeah.
Okay.
I mean, that's what Ray Dalio has been talking about, calling for 1937 since 2011.
Because of total indebtedness?
Yeah, that's what everybody's worried about.
Right.
That's what all the billionaires are worried about. I understand. I don't think it's an unreasonable worry, but what can you do about it? I don't think that it should dictate how.
By the way, that's debt to GDP.
I don't think that should dictate how you invest today.
Okay, and then the other thing that subsequently I should have talked about, Japan is 250%.
I mean, you should always build a portfolio that's mindful of the risks involved in the market, right? Then this is just one of the risks. Okay, Google Finance. So Google is partnering with Citigroup and was it like a Stanford checking union to get into checking accounts?
Yeah. Checking accounts are a shitty business.
Well, so Apple just did it with Goldman Sachs.
Well, they did a credit
card.
Checking accounts specifically are shitty business. Nobody really makes money on them.
Hold on. Here's a question.
Yeah.
Is this a trend that is going in one direction? In other words, the giant technology companies disrupting finance.
In 2015.
And wait, hold on. One last point. It almost feels like Stars sold their rights to Netflix for $25 million in 2000 whatever, and it basically it let them in. Now it's a Trojan horse. But now banks are just like, are they forced to let these tech companies in? Like, what do you think is going on with these businesses in the future of this?
In 2015, Google announced a service where Google users, like anyone that has a Gmail account basically, could compare quotes for various insurance products. And within like 9 months, they shut it down because nobody was asking for it and it wasn't really profitable. In 2011, Google launched Google Wallet. I know that there are a lot of people that maybe have stored their credit cards on Google, but
they still have, I think, 40 million users. They have a decent.
No, they have a lot of users, but like, is that disrupting anyone? Visa, MasterCard, American Express, all these stocks are making record highs. So I don't know that it's like a competition. I think people are storing their MasterCard and Visa in Google for use, which arguably is great for the credit card company. So what Google looks like they're doing, according to the reporting at the Wall Street Journal, is they're partnering with banks rather than trying to displace them.
Which they can't right now.
Why would you want to? I guess Google sells at 17 times earnings. They want to be a bank and sell at 8 times earnings. Like I don't even understand like why people would say that Google wants to be a bank. Google wants to be more tightly integrated into its users' lives.
Are we going to see ads when we when we go online?
I'm not,
checking
because I bank with HSBC, so I'm not going to see Google ads. But I don't think it's like all that.
Why do you
meaningful.
bank with HSBC? I need to know.
Because my old office had an HSBC on the corner, and my house where I live has an HSBC a few blocks away.
There you have it.
It was just easy.
There you have it.
All right. And that's, by the way, that's how like 99% of people choose who they're going to bank with. Okay. You said something really interesting. We had Ben Hunt come in this week. If you haven't watched that video yet, went up yesterday. It was so good. And I think you were kind of making the point like Ben's opinions since he left the hedge fund he was working at seem to be more volatile and louder. And like there is a difference between selling an opinion versus working in finance. And I think when you work in the industry, your opinions in general will be less volatile and
publicly.
Publicly, right. The things that you put out in public, because you're not selling the opinion, you're selling your services. I thought that was really an interesting comment. You see a lot of that.
Well, I doubt that his personality has changed. I mean, he's not a young man. So
Right.
I just think that now to your point, he's selling his opinions.
Right. And
so,
you want to be, and you have to be heard.
And and listen, that's his business. I think that he was much more even keeled in person than he is online, which probably goes for a lot of people.
Well, right. That's the other component of it. He's selling his opinions online.
Yeah, so I understand why he gets flamed a little bit, but I don't think that he's like unaware of what he's doing. I think he expects it.
I think if you're going to be like a quote unquote public intellectual and your product is your opinions,
you got to be there for the heat.
You got to be there for the heat. You got to know that that's like part of the reason why you're able to get an audience.
And he is. Seems like it.
And he is. Okay, what do you
got? So sticking with that. So Jamie Dimon. All right, listen. This is a very complicated topic, right? It is.
Let's figure it out in 2 minutes.
Yeah, somebody said to me last night, well, and this, it's a point that JP Morgan did $240 billion in earnings since he became CEO. He captured 0.004% of it. Is that reasonable? I don't know.
You're referring to his pay package for 2018?
It just seems like him getting over $1 billion worth of JP Morgan stock, it seems a bit excessive. And I don't know how you legislate this. I'm not saying that $700 million is appropriate. I don't know, but you think that,
It's totally excessive, but compared to what?
Well, I know.
That's the world we're in. And that's the going rate for the top bank CEO in the world. You want him or you don't want him, because someone will give him that. In other words, you know how we talk
the going rate is. I mean, that is.
Do we think LeBron is worth what the Lakers did that deal for?
Yep. There is one LeBron James in the world. There are.
So
at
think
least
there's one Jamie Dimon.
No, there's not.
Why? Who's as good?
I
Who has
don't
proven
know.
themselves?
I don't know, but come on, LeBron James is a world-class athlete. There are one of them.
Do you know how many large U.S. bank CEOs are still running large banks and were prior to the crisis?
Great.
Zero.
He did a great job. How do we know that it wasn't his
Zero.
How do we know that it wasn't his lieutenants and employees that also are responsible?
Of course
for
it
success?
is. But we agree, of course it is. It's not one person doing everything.
So I don't want to pick on Jamie Dimon.
Jamie Dimon would tell you that.
I just think that CEO pay in general, it has gotten so out of control. There was a great book a few years ago called The CEO Pay Machine. Barry had the author on his podcast. It's just gotten, it has become totally outrageous.
I'm not disagreeing. The average CEO is making hundreds of times, in S&P 500, the average CEO is making hundreds of times what the average mid-level or low-level employee at the company they run. We all agree that number has multiplied exponentially since the 1960s and 70s. I'm just pointing out that's now the world we live in, and if the board at JP Morgan Chase wanted to push back, who's to say Wells Fargo wouldn't just say, you know what, we're trying to orchestrate a turnaround? It would look incredible if we could recruit Jamie Dimon.
I get it.
So that's the world. I'm not saying like he's worth every dollar. I'm saying it's a relative world. All right, this is what I want to ask you about, and I have to read this very quick. This is from the Bank of America Merrill Lynch Fund Manager Survey.
Surveys.
All right. Recession concerns vanish. Net 6% of those polled expect a stronger global economy in the next year, up 43 percentage
That's so
points.
weird. What changed?
From last month.
What changed?
It's the biggest month-on-month jump on record. So the only thing that changed is price. Stock market hit a record high. And a lot of markets around the world started hitting highs too. So in late summer, we were talking about inverting yield curve and recession. It's either next month or in 6 months, but it's happening.
You have a question for me?
Well, that would argue for technicals being better than economic opinions if you're going to pay attention to something. Because it seems to me that
that's a big statement. I
the
mean,
economic opinions are following price.
Well, of course they are.
What do you mean, of course they are?
I'd rather follow price than economic opinions.
Okay, so that's what I'm saying.
Okay.
Isn't that a great argument for that concept?
Price over economic opinions? Yes.
Because we don't think price follows economic opinions, do we?
Of course not.
Right. So if you're going to pay a lot of attention to something, I would just focus on what people are doing, not what people are saying. That's like my big takeaway.
Profound.
Okay. Hey, let us know what you think
No, wait.
We have more?
I'm ending.
Okay.
I have the last one. Did you download and explore Disney Plus last night?
Yes.
Did you watch The Mandalorian?
No, I watched I watched Frozen. No, I literally did.
The
It's
Mandalorian?
fine. Is it good?
Quite good.
Okay. Let me watch that and then we'll talk about it.
Just one episode at a time. They're not doing the Netflix binge thing.
I'm fine with that.
I like it.
That's how I watch TV.
I like it.
All right. Let us know what your thoughts are. Leave us a comment. Make sure you're subscribed to the channel, and we will talk to you soon.